Good morning, everybody. Happy Wednesday to you. Gonna run back a couple charts on debt and finally getting out of the American orbit. So, gonna do some on the United Kingdom today. I've been promising it long enough, so finally should offer it. So much to do. So much to do. So little time. Let's jump into it. So this is still America, and I changed this one just to give you a little insight in how this works. It's just an iterative process. Again, this is why there's not a lot of charts up on my site, because I change this stuff, daily, every time I do a stream. Here we have M3 versus government debt. Okay, M3 is the broadest money supply and includes all retail deposits and all institutional deposits, money market funds, repurchase agreements, time deposits, institutional savings deposits, all those things that's included in M3, right? The Federal Reserve doesn't publish this anymore. Okay, so this is my publication, is 35.4 trillion. Now it is missing one key item, which is called eurodollars, all right, which is offshore dollars, and it's very difficult to find a proxy for that money supply. Okay, these are dollar deposits that can be in any bank around the world, any central bank governed country that's obviously not the Federal Reserve. So any offshore dollar deposit is not included in this money supply, and it could be in the tens of trillions of dollars, euro dollars. Okay, so dollar being the world's reserve currency, that's where it's going. Now, obviously, there's a lot of noise about stable coins. Dollar denominated stable coins are the only game in town, really, for the most part, mostly because there's a lot of central banks around the world, like the European Central Bank, which have been running negative interest rates if you look in their local member states. So stablecoin is just like a money market fund. You simply have a user use the token. In exchange for the token, you take their money and you invest it into an interest-bearing asset like a treasury. Okay, and you take a spread to cover your operations. That's why Tether has turned out to be one of the most profitable organizations in the world, because it has, a few dozen employees and it just earns a clean spread on its token every day, every week, every month. But it will be interesting, and I think the point of saying all of that is I think it's going to be more transparent eventually in the future, the euro-dollar market, because of stablecoins. Okay, whether you like them or not, or think that they're appropriate instruments or not, they're going to be used, and they're going to be used to buy large chunks of United States debt. And at the moment, the stablecoin market is $150 billion, right? That is a purely analogous to a euro-dollar market. And it's possible that all of, euro-dollar markets would find more faith in stablecoins than they would in, some random bank in an offshore country that might not have sufficient dollar reserves to back its deposits. So it's an asterisk. It's an asterisk to this money supply. Okay, but this is still pretty good, and this is how it is: 35 trillion. All right. Yesterday we showed you. Let's overlay the debt now. This is total public debt, federal debt, United States federal government debt. You can see it overlays pretty close. Usually debt is lower than the money supply, except for here you can see it's higher than the money supply. Okay, so let's do a ratio. Yesterday I did the ratio, the inverse, and I did it as a percentage. I think it's easier. Again, this is an iterative process. Let's look at this as a multiple. Okay, so the multiple is the broadest money supply in the United States, M3, divided by the total federal debt. And you can see here the multiple is topping at 2.18, 2.2x, where M3 in 1974 was $1 trillion, and the federal debt was a little less than half a trillion, 500 billion, 474 billion. Right? Again, no immediate conclusion here other than during uncertain, shaky times and perhaps pre-bubble times, as we can see here in global financial crisis, this number can be elevated. All right. What happened post-GFC, as everybody knows, were massive Wall Street bailouts. Federal government took on a lot of debt. The federal government, via the Federal Reserve, took on a lot of bad mortgage-backed securities. So there's now more debt relative to the money supply, and so this number is lower. But again, the Federal Reserve was trying to normalize their money supply and also more tightly regulate the broader money supply with new, Dodd-Frank regulations and KYC, AML, all the rest. So even though this number, this ratio was getting close to 1x here, it was 1x in 2018. It means the money supply is much less historically, because you can see historically in the last 60 years it could be as high as 2x or 1.5x, and it did get down to 1x on the dawn of the World Wide Web. All was not well right here, okay? Because actually right here. Whoops, sorry. Here. Because in September 2019, there was a big spike in repurchase agreements. The repurchase agreement rate, the repo rate, which was an intraday rate, a short-term rate, on basically Fed funds that non-banks hold, money market funds, hedge funds. It's another way of trading treasuries, basically. It spiked, and it showed that banks, non-banks, were not happy in giving up their federal funds, which they held at the Fed, via the repo market without a pretty high rate of interest. So it showed that not all was well. And with that, you see actually the money supply start to spike a little bit more, perhaps even indicating, a crisis and everything. But what else happened during this time? Of course, this is January 2020. We get up to 1.08x. We get up to 1.11x. Then by March 2020, a crisis of another kind emerges. And the world was flooded with debt again to wash that out. Not wash that out, but to intervene, to provide liquidity, to provide elasticity to the markets, whatever you want to say. So we couldn't really see if this thing could really flesh out of an increased money supply relative to the debt, like it did here and like it did here. Obviously, this is a way lower level, but we couldn't see really any of it play out because the debt was just, drawn down again. Federal government borrowing against itself to deal with the crisis that occurred in 2020. And now, for the first time ever, we actually have more debt than money, which is interesting. Okay, so the ratio is under 1x. Okay, it was never actually under there at all during the history of this index. Got very close here, 1x. So again, I had this as a percentage before. I think it's better now. So basically, this is the ratio of money to debt. Why do I show this? Again, when I always talk about Bitcoin and protecting yourself and your family, I think that this is another good chart to show you that markets are not always, but often divorced from economic policy and the whims of politicians. We can make the conclusion, as this ratio gets pretty high here, 1.75x, that is 1.575x M3 divided by the total debt, federal debt. It's actually even more debt in the United States. As state and local is not included here. But state and local governments can also not print money, is what it is. So we can make the conclusion that this was pretty high. We don't really know is it a topping indicator? Maybe once it starts to go down, but the crisis was already in full force. It topped here in March 2008. If you saw it go down in April, if you're really paying attention to this, and no one was, obviously, except maybe the Federal Reserve, but they weren't publishing M3 by this point. Yeah, maybe it was a warning sign. But, it could have gone down and back up. It's very, this is a lagging indicator is the point. But generally, as happened here, this was a stagflation period of the 70s. The Vietnam War was drawing to a close. Americans were tired of funding that. And obviously, that was an intervention that a lot of people weren't happy with. This is very elevated levels. So that could show times of economic instability. But where are we now? All-time lows. So I think this is quite interesting. Again, I'm not saying that no crisis is coming, because if you look at, say, M3 versus M2, there's a spread here, which I've talked about, which happened a lot here. Okay, M3, you see how this little spike happened here, and then here, if you looked at this versus, say, the M2 money supply, there was a spike. But again, that's just one data point. You don't really see that anywhere else. So it's hard to know. But what this chart says is maybe things aren't as bad as they seem. Again, I'm not defending profligate spending by the government. I'm not defending bloated government debts. If you want to get away from all that, just buy Bitcoin. It's the best thing to do. Absolutely. But according to this chart, technically, as we saw here in 1995, for America, that was a pretty normal, good time, in fact, leading up to the dot-com boom 5 years later. There's not really much happening here. It's not at all like a mortgage-backed security moment. So that's interesting. Now, I said I was going to get to the UK. Let's get to the UK. Let's do the same thing. All right, so here's the UK. Unfortunately, this one only goes back to the 80s. They have like 500 years of government debt data on the Bank of England's website. M4, unfortunately, is not that long. So they do M4, not M3. They also have M3, but again, you always just use the broadest money supply for this type of comparison. M4 includes like building society deposits, which, again, I'm not from the UK, so I'm not exactly familiar with all this stuff, but I guess the building society is kind of like a non-bank mortgage broker and a mortgage lender. Regardless, just use the largest deposits. Okay, so here, just for scale, this is $36 trillion. Okay, where's the UK? 146 billion pounds back in the 80s. Now, 3 trillion pounds sterling. That's M4. Let's layer on the UK's public debt. Okay, lower, as is typical. It's lower than the money supply. And getting close, just like the US, the debt is getting close now to the total money supply. All right, so let's do the ratio. M4 divided by public debt. There it is. Again, nothing incredibly cyclical or very easy to see crises. A couple things stand out. Obviously, this bump and this bump. And then this, which is very, very, very similar to the United States, is approaching 1 or under 1 in the United States' case. So the Cold War was ending right here. There was a lot of money relative to debt in the United Kingdom at this point. Disclaimer: this quarter here, from January 92 to March 92, is a new series. They don't exactly match. I don't know if anybody has a better resource. Let me know. But the quarterly debt published by the whatever it is, the UK Statistics Agency, which I didn't have in the source here, starts in 1992, and then there's a gross public debt, it's like slightly different named series from the Bank of England that goes back like 500 years. I just cut that off here. So whatever, it's slightly different. The trend is going to be the same, whether it includes, maybe one is total public, maybe one is a little bit, I don't know, doesn't include Northern Ireland or something. I'm not vetting this too much when I show this. The point is the trend, okay? So what I do know, what happened right here was quite interesting, is George Soros broke the Bank of England, made like a couple $1 billion, 3 billion or 3 billion pounds or something right here. %1 of the debt, 1% of the money supply, roughly. Perhaps there were other crises in the UK at this time, I don't know. But the global financial crisis happened here, and it's still elevated. Okay, so 2.6x money supply versus the public debt. And you can see the money supply, M3, M4 expanding. Unlike America, this actually kept expanding even after the crisis, which is interesting, right? America's fell down before the crisis. I'm looking at the dark green area. The UK kept it going. And here again, look at the black line. So both are increasing at this point. But it almost looks like the money supply is running a bit hot again, just a little bit here, just before, the pandemic. It could start to run hot, and then things go crazy, and we have massive public spending and public debt drawing to where this thing just keeps going down. So I don't want to say definitively that a low ratio here means low risk of recession. It's probably not enough data. I'll try to keep iterating on this and working on this, but historically, low ratios here weren't that bad as far as general crises that were happening in the country. If we look at Greece, I'm sure that Greece's crisis had higher ratios of this, especially around here, 2011, 2014. Although they took a lot of debt too, so we'll see. I'll have to do Greece next. But I do think it's interesting when you start to compare, large economies now to see how these things look. It's a very slow-moving oil tanker type of an indicator. You can go decades without much happening. And who was to say that this was the peak exactly here? Maybe you would have thought it's just coming down normally a couple months here, but it turned out to be the peak. It's very hard to say. But generally, and I think this makes more sense than the inverse of this calculation, which I was doing yesterday. If the debt level is close to the money supply level, i.e. this ratio is closer to 1, maybe things won't be as bad as we think. I'll do Russia as well. Our old friends Russia, who have been humiliated over the weekend by the Ukrainian special services. Fantastic operation, as I talked about yesterday. I'll show a little bit more about that later, but there's more to the global economy than just hating America all the time. If that's your shtick, if that's your thing. So that's the UK, and that's this metric of, broad money supply to government debt. Again, these money supplies are not comparable to Bitcoin. Okay, $35 trillion here, 3 trillion pounds here. This is not a comparable money supply to Bitcoin. Bitcoin is compared to base money, or the monetary base, or the balance sheet of the central bank. That's core of the system money, just like Bitcoin UTXOs are core of the system money. When you start looking at, say, balances of Bitcoin on exchanges, or, they have these earn accounts now on exchanges, and you start counting up, say, open interest of futures and options on exchanges or other platforms. And indeed, when we ever get to true Bitcoin banking, which I'm sure we will, and you start counting up the deposits that are Bitcoin denominated, then that money supply is going to start to equal something like this. We're a long way away from that. So at the moment, you would only compare the $2 trillion Bitcoin market cap to the Bank of England's balance sheet, which, by the way, is about $1 trillion. And Bitcoin passed the Bank of England in February of this year. There's only 4 balance sheets in the world that are larger than Bitcoin at this moment. The Fed, the ECB, the Bank of Japan, and the PBOC, People's Bank of China. Good morning, Dat. I need some British help here, please. Yes. Thatcher re-election 1987, Gulf War, of course. When was the Falklands? Maybe that had something to do with it. Yes, no problem. Gulf War, got it. So just another way to look at the economy, not freak out. Again, I'm not predicting no crisis. That's not the point of this. It's just to look at this chart and say, well, if crises occurred when we had relatively high lines here, high numbers, that is 2 to 3x money supply divided by debt, now we're at 1x. Again, it doesn't mean we don't have too much debt. It doesn't mean we don't have too big of a money supply. It doesn't mean we don't have other problems in the world and in our economies and societies and immigration or whatever might float your boat politically. Day by day, life's going to go on. Buy Bitcoin, be stoic. Okay, thanks. Yeah, so it's before this. Oh, no, this does start in 82, so maybe a little bit of instability here for the Falklands, but this ratio is closer to 1. I'll try to find somewhere. You have to go back. If you can't find it online, you got to get back to like paper sources to get, some of these older money supplies. And also the idea of a broad money supply, like all the institutions in the economy, that wasn't really around until, the 60s. Like they started the U.S. here in the 60s, M3. They do have usually basic deposits, like a checking account or a savings deposit. Those accounts are sometimes go back centuries, so you could do a multiple on those as well. But the financialization of money is all inside here. It's inside these big, big money supplies. M3, not M2. M3 is the one you want, not M2. Or M4, if they give it to you, as they do here. So, just another couple tools in the kit that, maybe things might turn out to be more sanguine than we think, as people do fear a reset in the economy, perhaps. That's why there's not as many deposits at the moment relative to the debt. Or it could just be that we have too much debt. That's totally possible too. Everybody likes to say that. We have large interest payments relative to the total federal budget. That's something I'll try to look at next as well with these two examples and more. But at least according to here, there's no, this sort of, this ratio can normalize a lot of the craziness that you hear or see on CNBC. Our favorite, just want to go back and show you, would be interesting if we just continue on here on this line instead of going way under or way over, right? I don't think that's going to happen. I think we're going up here, at least, not at least, say at most. I think we're going to 3.5x or 3x, 300,000, 300,000, 350,000. Could be wrong. Not financial advice, but here's the sort of 1 sigma move to the top. We're not even close to that. So even if it's early 2026, which it could be late, we might not get up 3.5x at this point, but we might get up to the 1 sigma move, which is roughly the blue line. And there you have, by a year from now, $225,000 Bitcoin also could happen. Yes, I agree. It's a great asset. It's a wonderful asset. And it shows, I know I've said this time and time again, but I really started the deep dives here, exactly here. And just how many newsletters said, it's like crisis is around the corner. We're all going to die. Buy gold. When really this was the time to be buying Bitcoin. It's Nike, my friends, Nike. And then this, I think, is the best one yet, as far as putting it all together. And this shows you, by the way, remember what this is. Let me take my ugly mug off so you can read this. So what is this green line? It's available gold and silver. Gold is about 20 trillion at the moment. Unbacked fiat money. All right, to find that, you need to find the monetary base, which is a liability of central banks, the main liability on their balance sheets, minus gold and Bitcoin reserves that they might hold, because that would overlap with, with things we don't want to overlap with in here. And so when you do that, you get the number here, which is at the moment, this is month end May, right? No, yeah, May, sorry. May, 42.8 trillion roughly. What does it mean? Okay, so I know I've talked about this for a lot of you guys. It's like I have to reiterate for some new watchers or whatever, but 43 trillion. Let's round it to 43 trillion. Okay. M3 of the United States, calculated by myself using a lot of different pieces of data that they don't put all together anymore, 35.4 trillion. All right, just M3 United States money. So it's just not the same thing. You have to use a very much smaller number here, which is about 5 trillion for America, which is the size of the Federal Reserve's, not balance sheet in this case, but the monetary base, which is the largest liability. So they don't mix. Deposits with banks do not mix with what Bitcoin does. Bitcoin is core of the system money. All right. So, oops. Sorry, let me put this back on. You can see me talking with my hands. All right, so again, now we're up to 2 trillion. As of month end of May, we have 2.08 trillion. Should be a little bit higher at the moment. $2.09. Oops, sorry. 2.09 trillion at the very moment that I'm talking to you. And then you can see the adoption, nearly 5%. We think 100% by a little less than 20 years from now. I know I was saying 2038 before. That was a different calculation, sort of a quick and dirty. This should be better. You never know. And by the way, again, when governments start reserving more Bitcoin, this green line will come down faster because we subtract the Bitcoin reserves. My face is hidden now, but you subtract not only gold reserves, but Bitcoin reserves from the monetary base, which is the ex nihilo fiat money that they print whenever they want. No reason why I think this isn't a great look into the future. So I got another one here. GDP. Okay, this is only going back 20 years. I'm going to show something like this and a bunch of other ones at BTC Prague. Going to give a talk, but I wanted to do these trend lines, but again, show the evolution for people. So if you look until March 2025, this is US GDP, 29.5 trillion. This is a flow. This happens every year, but you can still do a trend line. From 1969, the trend is this. And obviously, you'll see here from the global financial crisis, we've been under trend. Kind of interesting. And maybe that has even something to do with people thinking we'll even get into deeper of a crisis, or maybe we won't. Maybe we won't based on this number, right? But nonetheless, here's the trend of GDP. The growth rate, as you see here, 5.9% per year. Okay, it's exponential growth, straight line growth on log scale. So what is the change from around when Bitcoin started? It's another very interesting time period to look at. That would be year end 2008, basically. Bitcoin started January 3rd, 2009. So let's look at just, this period right? The trend line on this period, what does that look like? It's even slower, 4.4%. So two different trend lines starting at different times. I want to run through this quickly with a bunch of things like gold, stocks, Bitcoin. Bitcoin, of course, only starts here. And as you know, it's a power curve. It's not an exponential curve. Because the theme of BTC Prague this year is going to be like what's the word? Legitimization, normalization, getting sort of normies in. And obviously, if you got GDP that's slower than the historical trend, we can look at stocks. Stocks are higher than the historical trend. I don't have this chart drawn yet, but you get the idea. You got to keep up with these things. And, Bitcoin can do it. Yep. There's some great calculators on Twitter as well. I'm sure you've seen it. A guy named Sminston With is his name. Let me find it for you. That's this one. So this is a fantastic chart. All credit to him doing this, but if you start roughly at 10 now in 2025, he shows you how many you need to go out, and assuming the increase in the price, and assuming that assuming that your costs go up 7%, and the price itself is the 5th percentile power aggression, which is way low. Remember, I was showing you like the 97th and a half. So it's very the idea there is it's conservative. He starts here on 430, 2025. You're planning on 100K a year. This is how much Bitcoin you need if you retire in said year. So if you do it right now, and you're age 5. Wait, what does that mean? Why does it say 5 and not? Does that mean you can retire at age 5 in 2025? I guess it does. Yeah. Yeah, because if you're age 75, you will need, he says that it will go basically to presumably when you die, which is age 100, which is 25 years from now. Oh, you guys can't see that level down, can you? Hold on. Let me resize the screen. Resizing the screen. Not resizing, but so age 75. If you have 9.8 now, by 2030 you'll be down to 3.61, and then all the way to 0. I don't quite get actually why age 5 is different, to be honest. But it's cool nonetheless, because he's showing you basically when you run out of Bitcoins, which I presume is when he's thinking that you would die here, because age 65 is 10 more than here. But why would you be spending less at age 5? That's what I don't exactly get, to be honest. It's pretty interesting. If that's the case, that at age 5, you would only need 10.96 Bitcoin at age 5 to basically retire and live at 100K a year with your Bitcoin at the 5% percentile regression, and you only need a Bitcoin less at age 75, that shows you the power of the power curve. I guess that's what it means. He's taking this to zero by 95 years from now. In 2025, if you're age 5. Wow, that's wild. You only need one more Bitcoin than a 75-year-old. That's really interesting. I think I'm understanding that right. Gio, I see your questions. Hold on, let me get to this one first. Czech government set to face no confidence vote in Bitcoin scandal. Justice Minister quit after ex-convicts Bitcoin donation. Yeah, I saw this. I hope that, for me, I'm just hoping that the free market, free Europe, no authoritarian party gets in. I know that might be like kind of an issue with Czech politics coming up, but I don't know. That's what I care about most. Obviously, I think it was probably good if he just resigned. Bitcoin helps you. Bitcoin helps you work on it. Geo, no, I don't use Metcalfe's law. Let me put this back on, and I got to pull this back down. I don't use it. I probably should get some some estimations of Metcalfe's law and see how that goes. But Metcalfe's law is, it's true that is exponential. You could ask ChatGPT to draw it or whatever, but the thing that I've heard, and again, this is from proponents of the power curve. I don't know if it's exactly true, but since Metcalfe's law is a study of transistors or computational power, the doubling of that, right? The doubling time, the doubling speed of that, and it does turn out to be exponential. It's still, like a lot of these things, like the telephone or cellular phones or washers and dryers or a lot of these household appliances, the fact that those things are produced by companies, even Metcalfe's law, you have Intel and now Apple or whatever. Those type things tend to look at as this S curve of technological adoption, right? Where they go slow, then really fast, then slow again. People are calling for that for Bitcoin, but I don't think that that's correct. I think that it's better to look at Bitcoin as a network that is not only companies. There are companies involved, but not only companies. Anybody can plug in, plug out, and it's just the barrier to entry there is so much lower than producing something, which requires know-how and technical expertise and warehousing and stuff, that it will look a little bit different. And just to visualize the distribution of that, again, it's a thing like a network where you have many nodes with few connections and few nodes with many connections. So if you visualize that distribution, it will look like this. Now, of course, this is price or market cap over time. So it's a different distribution. This is just the x-axis is time and the y-axis is value. But the time is not the date. It is simply numbers. So as we go out, we're at we're getting close to day 6,000 right here, getting close to day 6,000. And as we will get to day roughly 660, 6,600, a little bit more, 6,800, as we get to an additional 12 or 13%, that's what the power curve says, the network will double. So we can see that here. it's not very long, right? So May 2025, 2 trillion. Let's go out and see when it doubles to 4 trillion. May 2027. So it took 48 months to double. It was very quick. It was much faster doubling here, right? Which I'm rounding to 0 trillion, so you still can't see it, but it was like a matter of months probably here. Whatever, you got it. Let's go back to this. Let's go from 2 to 4. So June 2011, 2. Let's go to 4. I'm looking at the second line here. June 2011 is, the curve is 2. 8. Sorry. This is a problem with streaming. Okay, so June 2011. The curve is 2. It gets to 4 already in October 2011. All right. But what that was from June to October 2011 at that time represented a 12.7% increase in the life of the Bitcoin network. So that's how you describe what you're seeing here. Every time this number doubles, it's an additional 12.7% of days of the Bitcoin network, or 12.7% of the time of the Bitcoin network. This is also true. It's very scary. If you want to try to go big and unload here or here or here or here, it's very scary to just unload Bitcoin. It's much easier to buy at any time, obviously, but it's very scary to unload a lot of Bitcoin. It's a very true point. Yeah. I'm thinking of computational power, transistors, isn't it? The fact that the computational power on a chip will double every 2 years. Isn't that the traditional Metcalfe's law? Let's see what Gemini says. Value of telecommunications network is proportional to the square number of users on the network. This means that as more users join the network, the value of that network increases dramatically, much more than proportionally to the increase in users. Right. So it's still exponential growth, as evidenced by the square, proportional to the square. Yeah, and like you said, there are real world depictions of Metcalfe's law. So you're right. I should layer that on. That would actually be interesting, even from here. I'll get ChatGPT to give me some sources on real numbers, because I think you can still define it as, computational power or. But it should be like this. And it's going to be faster. This is not very fast. The slope of this line is 7% per year. It's constant, but it's 7% per year. And Metcalfe's law should be like, it should be 100%, or 100% would be a doubling every every year. It's 100% compounding growth, and I guess it doubles every 2 years, so it's less than it's 50% or whatever it is. This is why I can't do, this is why I like to draw the numbers before I just try to do them in my head. The point is Metcalfe's law would be way faster than this curve, but it would be interesting maybe on a different axis or to show a different chart is to show a real world example of Metcalfe's law in practice, because it should be faster than this, should be much faster. And it's going to be closer to this. Although again, this is an exponential, so it's not going to, Metcalfe's law should be a straight line on log scale. This guy's a great follow, though, if you don't follow him. There he is. Great guy. So I just want to sprinkle it in. It's an unbelievable operation Ukrainians carried out on Sunday. And just to remind people, Zelensky said it himself, it was the largest drone attack of the night before their operation. So people want to say that, Ukraine is somehow obfuscating the peace process. On May 31st, well, actually it was June 1st, the night of May 31st into June 1st, Russia launched a massive attack, over 480 drones and missiles. The only way that you can negotiate with an aggressor like this is to overpower them. What do you guys think of Brian Johnson? I know we're going from topic to topic here. I'm definitely into the supplement game, not the just any supplement, but there's a website, donotage.org. It's a British company, actually. It's a British company, and it's really good. You can get NMN, pure NMN at pretty reasonable prices, good shipping. Quercetin, NAC, berberine, all those types of things. I do take those. It's also probably would be a good idea to check in on old Ray Kurzweil. You guys ever follow him? The transcendent man, where we seem to be reaching our limits, but then it just happens that we'll push the limits a little bit further. I do like that philosophy. I think it's a little bit wild where he says he's going to try to bring his father back to life. He's 77, Ray Kurzweil. But yeah, it's a fine idea, and he talks a lot about exponential growth. But the idea of bringing your father back to life through AI is, I don't know, maybe there are weirder things. There's certainly stranger things been suggested. Look at me pumping other websites now. Dat, you should check this out. I'm a fan of this, to be honest. It's like a not-for-profit, and they run like a profit, for-profit entity. It's unbelievable how, like, to the point. Their emails are very to the point, very good. And, they got stuff for pets. I'm not associated with this company. But there's a lot of good anti-aging molecules and supplements and free shipping worldwide. So look at that. I've heard about black seed oil, but I haven't really. What's the benefit? Is black seed oil for the liver? Because obviously the liver works hard with any of these supplements. I'm wondering how the hardcore economic people feel that we started talking about NMN and anti-aging supplements. Also, just to remind you, you can find it. You can always donate here. Please donate. My BTC Pay, you can just easily donate right there. No ads, no nothing. But if you look at it, it was just still the only chart on my site. But if you go down, it's got the power curve, the bands. Remember, this is the X factor number that will show you how the keyword is proportionally the power curve grows. It's right here. It's the days of the total system. All right, so we're almost to 6,000 days. We've passed 5,500 days back in March. 6,247th day will be in February 2026. You can pick any day as a starting, but I've just started. My first piece of financial pricing data is here, May 22nd, 2010. And basically for every 12.7% increase in this number, the trend tends to double in Bitcoin. That's what you see when you see this. It looks like this graphically. This is Black Seed. Interesting. I should look at it. Black Seed, I've noticed, is not on that website, but I've heard about it. BTC is definitely worth the time. I'm not really obsessed with aging like Kurzweil is at all, I should say. But the idea of just living longer and healthier based on products that are available, I think that's totally great. Also good point. Also good point. Do you guys want to look at anything else? I'll try to get more UK charts. Good morning. Name goes here. Good morning. Should I say good evening? You're in Western time zone, right? So it's 2 a.m. there? There's no really predictive power here, but it would be quite interesting if we had pretty low economic issues, because this is closer to 1. On the other hand, and I should try to get this through World War II, because obviously this is, we got crazy geopolitical things happening. Big debt spikes always occur during war. And obviously we're doing that now. So again, I'm not saying one way or the other. It's, guarantee that you just have normal economic times as this is closer to 1. But that is what at least this chart tells you. I presume you're talking to me, and I guess the answer is that by default I am, but I'm not exactly. There's nothing in my internal constitution that really says that it has to be. If there was some other form of money that was better than Bitcoin, I'm not saying that's blockchain-based money, but just some other better form of money, then I'd hope I can look to that. That debate is kind of tired and old, and I will say everything else besides Bitcoin usually trades like a shitcoin, so to speak. So, that's why I just don't talk about them. I think people should just be careful. But you can certainly make above average returns trading some of those things. So maybe a little bit by default. I am. And these actually are good charts to answer that question, right? So people think like because of Bitcoin, there's going to be no debt or no other derivatives of money. This is just a derivative of money supply, right? This is just the Bank of England's balance sheet is only $1 trillion, trillion pounds, trillion sterling. Broad money is 3 trillion. So, the very simple multiple there is 3x. Okay. I presume we're going to have other deposits that are Bitcoin denominated and other things happening with other systems. Because it's just more efficient to trade those certificates around rather than it is to trade the actual Bitcoin around. I think it's the dream of a traditional Bitcoin maxi that we either use the on-chain Bitcoin network or the Lightning network for everything. It could happen. History tells us that doesn't happen. And even more telling is if you look back at societies that don't have central banks, where one would, I guess the Bitcoin maximalist would assume that everybody held gold. The answer is that almost nobody held gold. I mean, they wanted to have more deposits versus the gold in the vault. That was even for systems that did not have a central bank, like Scotland and Canada and Sweden. So I'm swayed much more by that historical research than ideas of where Bitcoin could go. Again, it's all gravy for us, right? If I'm wrong or if it's just like Bitcoin for everything. Because remember, look at this picture. This is everything in the green line is not Bitcoin. It's gold, it's silver, it's government money. I'm just drawing trend lines. And I see nearly 20 years. I don't see any hyper Bitcoinization happening. Even if there's a lot of debt. Even if people are going crazy and there's authoritarians around the world. And even when we get to this point, as I said, whether it's 100 trillion or 150, wherever it is, that's not overtaking it. That is 50-50. It is 100%, meaning it's 100% of the value, but it means that there's $150 trillion worth of Bitcoin value and $150 trillion worth of other stuff that's typically base money value. One thing I think we know for sure is that governments and central banks are going to fight tooth and nail to keep their privilege of issuing currency, and they can issue currency in a Bitcoin world. So again, why would they not try? They might fail, might not work. But I think for all of those reasons I'm describing, I'm probably not a typical Bitcoin maxi or not a Bitcoin maxi at all. I think this thing just went off. I was responding to that tag. Anyway. $3 trillion sterling, 36 trillion dollars. No matter how crazy the newsletters get, CNBC gets, Bloomberg gets, I just don't see, like, this stuff's not going to implode to zero. I know that's what everybody says, or it's what everybody in the Bitcoin world says, but I just don't see that. I think it's going to be a slower accretion of value. You know, if everybody in the world sold their $2 trillion worth of Bitcoin, like tomorrow, not everybody in the world is going to get $100,000, right? This stuff happens on the margin. It's emergent. It's constant. And it happens with other assets too. It happens with gold, happens with oil, happens with copper, happens with steel. So even though these are like traditional store of value assets that we have on this chart, just because you pull from one bucket, or people might go to your bucket rather than the other bucket, it doesn't mean that other bucket ceases to exist or might not find value in other ways. You know, I don't know. But yeah, I think the Bitcoin maxi traditional idea is that we go exponential. We go hyper Bitcoinization, exponentially off the chart. Let me put this on linear. This is another cool way to look at it, right? Linear. So the green line is exponential. Bitcoin is power. Bitcoin obviously is growing faster, and it's even has this decelerating growth, right? Its growth decelerates, but it's still way faster than fiat money and gold and silver. Yeah, I've heard some about that. Like Sam Harris talks about that and other folks. I'm not too deep in the ideas, but certainly open to them. I was raised Catholic. I guess Catholics would have a problem with this idea, but you know, I'm not exactly in that world right now. So, who should I read there to get more into that topic? I think that's why I have comfort in the numbers, right? In the trend lines. Could be here. Could be the mythical 100 trillion. And when Bitcoin gets to 100 trillion, it's we start denominating things in Bitcoin. Could be 150, could be 200. It takes from November 2042 until December 2046. It takes only 4 years, one halving, to go up 50 trillion, according to this curve, from 150 to 200. And if you look at from, say, here, how long does it take to get to 50 trillion now? Not 50, but an increment more of 50. All right, so we're at here, 2 trillion. How long does it take to get to 52 trillion Bitcoin? A lot longer. $12 years. So it may seem exponential like, right? Because it's still, you grow faster later in dollar terms, but percentage wise, you're actually not, which is the weird thing. So it takes only 4 years here to get from 150 to 200 trillion, but it takes 12 years here to get from 2 trillion to 52 trillion. Probably should chart those years out, shouldn't I? That is years it takes to reach the next level, the next benchmark. It's definitely the stoic asset. All right, guys. I think that's probably going to do it for me this morning. Unless anybody has anything else. And I need to add Metcalfe's law, don't I? Need to add Metcalfe's law somehow. This is, it's going to be like cost per transistor or cost per computational unit. I don't know how they're calling it anymore, but I'll try to put a graph of that, at least to see the growth rate, the slope of the curve. And it should be, I'm guessing it's going to be slower than this black line and faster than the green line. And I'll do it on computational power. I think that's a good way to do it. All right, everybody. Thanks for tuning in. Have a great Wednesday. Who are you? Is this a free will thing? Tell me what books. Send me a message. Send me an email or whatever. All right, guys. Thank you. Talk soon.